Here on the Trading Coach podcast, we talk a lot about accelerating your wealth, not just through trading, but by finding other forms of supplemental income as well. Well, an easy way to do that is by sharing your story by using Spotify for podcasting. Not only do they allow you to record and edit right from your phone or computer, but they'll also shoot it out everywhere that podcasts are heard and even pay you to do it, which still doesn't make sense, but hey, we'll take it, right? Video podcasts are also available as well, which is a really cool option if you're into sharing your charts and stuff like that. Best of all, it's free. So as someone who measures risk reward for a living, this is a no-brainer. So if you're ready to create, don't wait. Download the Spotify for Podcasters app right now, or go to www.spotify.com/podcasters to get started. Speaking of getting started, let's get started with the show. Hey traders, we got two topics on hand today. We're going to talk about raw versus standard trading accounts. We're also going to talk about the importance of demo trading and how it can prevent you from blowing your account. Now, I know a lot of you guys are against demo trading. Just please don't turn the podcast off. Give me a second to make my case, and I promise that it will be helpful in your trading. If not, you can just leave me a bad review at the end of the video. But before we get into that, we're going to start off by talking about the difference between a raw versus standard account. Hope you guys enjoy. I want to talk a little bit today about maximum favorable excursion. But first, also want to discuss a few topics that recently came up on our tier 1 chat this morning, because I thought they were pretty cool and thought they were worth discussing for you guys that regularly watch the Q&A, so you have them in your arsenal as well. And one is the difference, Kevin was talking about this morning, the difference between raw accounts and standard accounts in trading. And just to give a little bit of info on that, that's basically the difference between how you're being charged. So a standard account is your standard trading account where you don't pay a commission per trade, meaning like every trade you don't pay blankety blankety blank, but you pay a different form of commission in the form of the spread. So, when you get into a trade, the broker takes their spread. That's how the broker gets paid, by that difference between what they're quoting at and what you're actually paying to get involved. So it's basically the same thing as a commission, but taken in a little bit of a different way. A raw account would charge no spread, so you would get in at the said price. However, you would have to pay a commission for each trade. So, for example, in stock investing, for example, when you buy something, you're getting in at the price for the most part, but it costs you money to get into the opportunity. So advantages and disadvantages of both. Really, the raw account, the only advantage of that is if you're someone that's doing like some really short-term, lower time frame trading, let's say like scalping or something like that. So let's say if you're someone that's trying to get in and out of the market in like say 5 pips or something like that, well, that spread is going to make a massive difference. Or for example, I had a range bar strategy years ago that had little wiggle room. It was very quick in and out, high win percentage, risk reward was fine. The difference was that when I traded it live, the spread made such a difference in my numbers that it didn't reverse the risk reward, but it basically took it down to a break even strategy because I didn't take the spread into account. And again, on a very short term range bar strategy, the difference between 2 or 3 pips, per trade made a massive difference. So that would have been an example of where it would have been beneficial to use, let's say, a raw account where I can just get in at the number that I wanted to get in at and not necessarily have to kind of pay that extra spread, which screwed up my risk reward and basically killed the strategy. That also goes to the other topic we were talking about on the chat this morning, which was the difference between, or I guess why it's important to demo trade. And I get yelled at for a lot of things on the internet because, truth tellers typically get yelled at. But one of the things I got yelled at once before, or multiple times before, is telling people that I think it's beneficial to use a demo account, right? I think the process of learning how to trade should be, one, you learn how to trade, you learn the basics, 2, you kind of explore different things and either build a strategy or settle on a strategy and make it your own. 3, you backtest that strategy to ensure that you have an edge. I just did a podcast on this. I didn't post it yet, but a podcast on belief and the power of belief and how that relates to performance. Hopefully I'll have that come out this week for you guys. But you backtest, you build that belief. You also acquire data. Not only data that's going to tell you like, hey, this thing works, I have an edge, I should trade it, but data that you can use in the future if you ever get stuck or if you ever have questions or if you ever want to make any tweaks. That's why backtesting sucks. It is time consuming, but it is very important because you refer to it so many times in the future. And then after backtesting, I always think you should demo trade, right? Instead of going straight to live trading. And, people will be like, hey, what's the point of demo trading? It's a waste of time, right? I was like that in my trading career as well. You guys know the story about in my early trading times, I called myself a demo account king and a live account joker, I guess you can say. Because I swore I never lost on a demo account. Now I was doing dumb stuff where I didn't really have stop losses, so I would just hold stuff until it reversed. So that's why my win percentage was 100%. But the fact was, I would tell myself, hey, I'm going to demo trade for whatever, 3 months, something like that. And then I'd do it for 3 weeks, and then I'd be on fire for those 3 weeks, and I would get mad about wasting real money or opportunity, and I should be making real money instead of fake money, and I go straight into live trading. But demo trading is beneficial because Kev mentioned this. He said he took one of his, I think it was his breakout strategy he was talking about, and he was demo trading it and noticed that he's not really getting in where he wants to get in. It's hard to execute the orders. The speed of which he needs to kind of wait for the candle to close and measure out fibs, then find a position size based on the stop loss. And the amount of time it takes to do all those tasks is just not enough. And he's trading down the 15-minute chart. By the time he does all that, the trade has moved out the way. And that is a real thing. And it's a good thing that you find out those hardships on a demo account instead of a live account. Because again, in the past, I've taken stuff where I've gone straight from back testing where it worked, where everything's in a controlled environment. I can take 5 minutes if I wanted to measure out pips and figure out position size and all that fun stuff. In real trading, markets move a lot faster, especially if you're trading during one of the busier times of the market, the London or the New York sessions. And what you'll notice is that you may not have the time that you think you have to do your order execution. So demo trading is a great step to practice your order execution. It is a preseason friendly, right? It is, we used to do this in, when I played football at college. We would have these meetings the day before the game or the morning of the game where we would just line up and practice different formations. So the coach would be like, special teams, run on, and we run on, or this formation, run on, and we would just practice the in and outs of changing formations and changing audibles and just being in the right position. And we did that pre-game because we wanted to make sure that we can actually execute it in the time needed to execute it, right? In football, American football, you have this play clock, so you have to get a play off in a certain amount of time. So if you're slow or someone's late or you're thinking too much, it may take too long to make those switches, and then you run out of time and you get a penalty. So we had to rehearse that over and over again to make sure it was actually doable. And trading is going to be that same way, where think of your demo as not just kind of this weird period between backtesting and trading live. Think about it as a time to kind of fine tune all of your trading skills, your test drive, to drive on a closed course before you hit the real road. I was going to make a submersible joke, but I still feel like it's too soon because it's a disaster. We probably shouldn't be joking about it, but it's also, we won't get started on that. But you should do all the proper checks and balances in a controlled environment to ensure that you're ready for the real environment. And that's what backtesting, or that's what demo trading is. And again, it's good that Kev found out these hardships in a non-risk environment versus having real money on the line. Because again, now you go into that panic mode where all of a sudden you have this expectation that, hey, I'm going to place my first trade and it's going to go like this. And then all of a sudden, right, it's taking more time than you thought. And then the market moves without you, and then you get in a little bit late, and then you're in this panic distress type of mode where you're a little bit late, so now you didn't get the right fill. So now, okay, well, how do I handle this? Well, let me move targets a little bit further so I can make up for what I lost. So let me move my stops a little bit back to make up for what I lost, and it spirals and snowballs into these bigger mistakes. And many of us have panic traded before, so it's just not a good thing. So take the extra time, do the extra checks and balances. At the end of the day, I always like to think about it like this, and not enough people think big picture, right? We aren't, our trading careers, we don't plan on our trading careers being a month or a year. Like most of us, when we get into trading, we're looking at this as something that we can do 5 years, 10 years, 15 years, plus into the future. So what's an extra month now? What's an extra 2 months now? Bigger picture, what's an extra year? Right? If you want to take a year demo trading while you build your capital or while you prepare for a prop firm evaluation, like what's the big deal? It's 1 year out of a 10-year career. You have 9 left. It's 1 year out of a 20-year career. You have 19 left. It really is nothing. But many of us don't have that patience. And again, not to make light of anything, but when you rush into something and you don't do the checks and balances, right? Think about the risk reward. The risk of waiting a year to get everything right, okay, you lost the year. The reward is you have a much greater likelihood of success in the future. The risk of going too early before you're ready, potential disaster. And again, we've seen that recently, unfortunately. Hope you enjoyed the podcast. Remember, if you're against demo trading and you didn't like what I had to say, not just you didn't agree, but you didn't like me, you thought it was BS, just leave me a comment. Hopefully I don't see a lot of those as well, as I think it's very hard to argue against safety in trading. But do it if you feel inclined to. Also, if you're interested in going through the process of learning how to trade the right way, meaning having all the checks and balances as far as the process goes, and having the community and mentorship to make sure that you're doing things the right way, check out our platform, www.tier1trading.com. We were featured in Forbes magazine as being one of the leading innovators in trading education. So if Forbes gives us the thumbs up, well, you know we're doing something right. www.tier1trading.com. Start with that 14-day risk-free trial, and I'll see you guys over on the platform.